Hello and welcome to NJBIZ Conversations. I'm your host, Jeff Kanige. My guest today is a great friend of the show, the CEO of OceanFirst Financial, Chris Maher. Chris, welcome back.
Great to see you, Jeff.
And Happy New Year. This is the first edition of this podcast for 2025. So I'm glad you're my first guest because you're one of the more interesting ones. So
I'm honored. Happy New Year.
same to you. Okay, NJBIZ readers also know that you were director of the Philadelphia Fed and a member of the board of the New Jersey Bankers Association. So you're a great person to talk about both the economy in general and the banking industry, as you know, along with being a CEO of a bank. I wanted to talk a little bit about the outlook for 2025, but before we get there, I did want to look back a bit on 2024 and get your assessment of how the year went. I mean, from our reporting of some of the statistics and other numbers that sort of, economic measures, it looked like the economy was pretty strong for most of the year and then finished strong too. Was that your sense on the ground that the economy pretty much stayed strong throughout the 2024?
Yeah, it was a surprisingly strong year, a little stronger than I think any of us expected when we went into the year. There
Okay.
was some reason to be concerned earlier in the year, but we ended the year well. Some of the sectors, housing being one, was still a little bit weaker than we would have liked to have seen, but other areas of the economy picked up, productivity picked up, so the growth numbers were better than anyone anticipated earlier in the year.
Okay. And did that translate into sort of a better business climate? Were you sensing that folks were relatively optimistic throughout the year? I mean, what was the feeling you were getting from people you were talking to?
I think the primary optimism came from seeing things begin to normalize. So although inflation remains a topic we've got to be, very vigilant about, it got better during the year. That made people feel better. As we got into the third and fourth quarter, we had the normal, I'll call it the election malaise, where
Mhm.
people are just a little concerned about a variety of risks and unwilling to make decisions around any election, regardless of who's up for office. So I think having the clarity of that election behind us will help people make more plans going into this year.
Okay, and we'll get to that, as I said, in a minute. Um, uh, were there any sort of negative surprises, any hiccups that you weren't expecting that you saw? I mean, you mentioned the housing market that had been weak, and that sort of that seemed to persist through most of the year. Was there anything else that you kind of scratch your head and said, why did that happen, or what was going on here?
Inflation was a little bit stickier than I think we would have liked or we would have expected at the beginning of the year. That translated into fewer Fed rate cuts during the year, which then resulted in elevated mortgage levels, in particular mortgage rate levels. That 10-year stayed stubbornly a little bit high. We had a reprieve in August and September, but then
Okay.
that kind of came back afterwards. So I think that as we look back on last year, that stickiness of inflation, less movement around interest rates than we would have liked, those were kind of the two primary issues that we saw.
Okay. By now, you have obviously a strong presence along the shore. By now, I'm guessing that most of the businesses down there have crunched the numbers, and we've done the same thing. And it looked like it was a fairly good year, although maybe not as good as some people might have expected. How did you see the way the year went for the tourism industry along the shore?
Well, it was a rock solid year for the shore.
Okay.
And it's funny, if you compared it to 2023 or 22, it was up a little bit or flattish. It wasn't anything to be excited about. But we have to remember that if you compared it against the pre-pandemic numbers, the shore economy has gotten much stronger in the last several years as people have better access to remote work opportunities or have the ability to spend that long weekend or longer in the season, spending say September down the shore or coming down the shore in May, which you wouldn't have seen in prior years. So a reasonably strong year, not much movement year over year, but in historical context, a very good year.
Okay, and that had in the past few years had translated into relatively strong residential real estate market. Did that hold up throughout the year?
It did. And in fact, we just saw a report that the second home market in Cape May is the most robust in the United States.
Oh, okay,
So
wow. Okay.
we're still seeing prices stubbornly high. We're seeing inventory very low, and there has not been much construction activity. So I
Mhm.
think that's something we'll look closely for in 2025.
Okay. Well, there you go. That's a perfect segue into talking about 2025. A lot's going to happen in Washington. And in Trenton, there's a gubernatorial election here in New Jersey. I'm not sure anybody really knows what to expect from what's going to happen in Washington. What is your sense of what we're getting into here? Are you worried at all, or you think the economy can sort of withstand anything at this point?
The economy's on a pretty strong track, so we're not overly worried about seeing that, economy slide or about bad outcomes, at least in the first half of the year.
Yeah, okay.
There's a lot of uncertainty out there, so although we know a few things about, personnel that will be appointed to certain positions, there's still a lot to be understood around things like tariff policy.
Right.
So we'll have to wait and see. But the base economy is so strong that we don't expect that any of these policy changes early in the year are going to have much impact on that.
Okay. Where in particular do you think the economy might be strongest? Not necessarily in sectors, which sectors may be best, but also in things like employment. Do you expect that to hold up?
Yeah, so I'll take the sectors first.
Okay.
Interestingly, there's been a fairly robust real estate market. So
Mhm.
this is kind of the two tails to this, right? The market is robust, but there's not a lot of inventory. We've seen even in the commercial real estate sector, areas like retail where you would have had concerns over the last few years. Retail's at, pretty good occupancy levels. We're even seeing a bounce back in office, including in some of the key metropolitan areas. You're starting to
Okay.
see office occupancy moving in the right direction in places like New York, which we thought might take a few more years. So real estate's strong. Transportation is kind of bouncing off a low. Transportation had a hard time in the last 2 years, but
Mhm.
it's doing better.
Okay.
And that's obviously a key industry for us here in New Jersey.
Right.
And then tech is doing really well. So when you think about anything that is tech enabled, we like to talk about the broader sense, things like NVIDIA, but there's a
Right.
lot more to tech, right? There's a lot of emerging technologies that are being deployed in very interesting ways.
Okay. And given, I mean, you mentioned the uncertainty, and yes, that's going to persist, I think, for a while anyway, until things begin to shake out. Is that affecting decisions that people are making? Are businesses putting off making decisions until they see that shakeout, or are they going ahead with what their plans had been? I know it's a sort of a. I'm asking you to generalize a little bit, but if anything you can tell us about what the attitude is now about that would be helpful.
Well, I think that the uncertainty is not uniformly distributed, right? It's in certain sectors.
Okay.
There's more uncertainty than others. So what we're seeing in the traditional, for example, the real estate sectors, multifamily housing construction is starting to pick up. I don't think anyone's going to be waiting long to figure that stuff out. The two sectors I would point to would be particularly around healthcare and around anything that relates to import. And obviously,
Okay,
Port
of course,
Newark
yes.
is a giant part of our economy here in New Jersey.
Mhm.
But healthcare, there's a complex web of payments for different kinds of healthcare services. There may be changes to the way that payments methodology works and to what's incented. So I think there may be some hesitancy in certain areas to make investments until that's better understood.
Okay. And now I know it can be difficult for you to talk about monetary policy, but I'm curious what you can tell us, if anything, about what you expect in terms of inflation and interest rates.
Well, we were in the camp that as inflation proved to be sticky,
Hmm.
uh, you know, to make absolutely certain that you've got inflation under control. So I think that the current kind of pause environment that the Fed is working towards sounds like the right approach to us. I will note, Jeff, I stepped down off the Federal Reserve Bank of Philadelphia board last year. I concluded my
Hmm.
service there. So I'm a little more free to talk. I
Oh,
I,
good.
I think that
Well, that'll
there's
make
really
these kinds of things much easier.
yeah. So I will say that if you think about, and this is an imperfect analogy, but if you think about the late 70s and early 80s, it's a very dangerous thing if you believe you have inflation contained and you don't. So I
Hmm.
think we've got to be very vigilant. We've got to watch those inflation numbers this year. We have to make sure that to the extent that there are additional rate cuts, that they're well supported and warranted. And we're just going to have to watch the data and make sure that it shows what we think. It's funny, if you think about the main concern most talk about, which is tariffs, tariffs could have an impact on inflation,
Hmm.
but maybe not as much as people think, and
Okay.
certainly not in a long-standing way. And what I mean by that is if you have an inflation issue that's driven by a tariff, it's usually a one-time issue. and it doesn't kind of come back year after year after year. So you may have some price pressure in the short term, but tariffs in the long term don't tend to add as much inflation. And it's, it's going to be really important where the tariffs go in. Obviously we're not going to tariff something like eggs, which we grow here, but eggs has been a stubborn kind of bellwether of inflation for the last couple of years. So we'll have to watch what the final tariffs wind up being, which sectors they're applied to, and there may be a small inflationary impact. The other one is labor. You asked about the job market. Job market is pretty solid right now, but I would call it solid, not strong. Obviously, if there are, say, big changes in immigration, in the issuance of visas or
Hmm.
deportations, we'll just have to watch those marginal labor numbers to make sure that we have the units of people we need to be as productive as we need as a country. So it'll be a balancing act.
Okay. Now, aside from political uncertainties, are there any areas that are sort of organically concerning to you? I mean, again, putting aside what could happen with immigration or tariffs or anything, is there anything about the way this economy has developed that kind of concerns you a little bit?
Well, I think that the number one thing you would think about that is a little bit outside any of our control and maybe outside our ability to kind of really understand that well is the geopolitical risks, right? We
Hmm.
still have significant issues going on in both the Middle East and Ukraine. Those have big repercussions. So you could imagine an environment where one or both of those conflicts de-escalates substantially this year. That would be a tremendous positive to the global economy and a positive to the U.S. economy. Um, However, there are certain sectors and certain companies for whom that might be a negative, right? If you're making the anti-drone technology, you're making missiles, things like that, de-escalation might not be as good for you as it would be for the kind of the world in general. So when I think about the risks we can't control as much, it's things like that, the geopolitical risks or a disruption in supply chains. We see what's going on with the Houthis in the Red Sea. That
Hmm.
has largely not disrupted trade, but you could have, if you had any disruption around the Panama Canal, for example, you could have a pretty significant impact to supply chains in a pretty short period of time.
Okay. And this is something like bird flu, for example, which kind of seems to be bubbling under the surface now. Although every once in a while you hear a story that suggests that could blossom into something bigger. Is something like that a concern?
Absolutely. Whenever you think about the risks, sometimes those tail risks that
Hmm.
may not be likely, but should they happen, would be a significant impact to the national economy. You got to keep an eye on those. So that
Okay.
the bird flu would be one of those. So far, it looks like the situation in California is controlled, but it's worth watching.
Okay. And that was going to be my next question: is what should business owners and executives be looking for? Are there any bellwethers that they should pay attention to that would give them a sense for where things are going?
I think paying a lot of attention to where employment's going,
Okay.
and where the inflation numbers are coming out. And on the employment side, it's particularly important because you don't have widespread events, credit events or economic events, without having a significant employment issue. So if employment holds in, just about everything else in the U.S. economy will be okay. There may be
Oh,
winners or losers. They may be regional winners, regional losers. But if the national employment numbers look good, you can feel pretty good about the year. The consumer seems to be well balanced, low debt levels. So I wouldn't be too worried about that. I would be watching for signs of inflation, signs of stubborn inflation, especially around housing. That's the big concern right
okay.
now,
Yeah.
that the
Right.
cost of housing could drive inflation up, and we should be watching that really closely.
Right. Oh, yeah. Affordability, certainly a huge question. So, before I let you go, then tell me about your attitude in the bank in the banking industry. Are you optimistic? Are you pessimistic? Are you confident about your bank's business and about the banking industry in general going forward?
Yeah, we're very optimistic going into
Okay.
this year, and predominantly because the environment we've been in for the last couple of years has been punishing for most banks, meaning that our short-term interest rates were higher than long-term rates. So that inverted yield curve was one of the longest we've seen in generations. That's a very difficult environment for most banks. So think of that as a headwind.
Hmm.
And the second thing, that over the last year or two, there had been a concern that there might be a broader negative credit event, and we've not seen any signs of that.
Okay.
So if credit is holding up well, which is everything that we see, and this unusual inverted yield curve corrects itself, it should be a pretty good year for banks.
Okay. Well, We'll see, and I'm sure we'll have you back, and we'll see how that pans out. Chris Maher, CEO of OceanFirst Financial, thanks for joining me. I appreciate it,
All right, thanks, Jeff.
and we'll talk to you again soon. Thanks, and thank you all for watching. Until next time, stay safe, everyone.